Hi everybody, it's FIBO Group and you are watching to the Market Watch review. Asia's equity markets have extended their recovery and Europe's Stoxx 600 has risen for the fourth consecutive session. However, U.S. futures are trading lower than the January CPI number. Today's laggards include the yen and the krona, which have seen major and emerging market currencies edge higher. The marginally higher gold price for the month was $1,836, but it was met by sellers at $1,836, pushing it back to $1,830. After a brief period of profit-taking, March WTI had regained the $90 handle due to an unexpectedly large drop in U.S. oil stocks, the largest decline since September last year. Asian Pacific market. The Bank of Japan took action to defend its yield curve control policy. On Monday, the Bank of Japan announced that it would issue unlimited 10-year bonds at a fixed rate 0.25%. Tomorrow is a national holiday in Japan. This is the first such operation for 5 years. In a single month, the US dollar was closest to JPY 116.00. Today's purchases completed the QE by the Reserve Bank of Australia. It currently holds approximately 40% of the government's total debt. Market of Europe. Today, the European Commission released a new economic forecast. It raised its CPI forecast for this year and next, but still expects the rate to be below 2% next. The projection for next year was increased to 3.5% from 2.2%. The range of the euro is $1,1395 to $1,1450 for Tuesday. In the European morning, it is close to the top of the range. It will likely not make any more progress than the US CPI figures. The important cap is $1,1500. Sterling continues to trade between $1.35 and $1.36. It hit a session high of 3,580 in early European turnover and was met by a wall full of sellers. UK releases Q4 GDP details in December tomorrow. Market of America. The US January CPI today may seem a little anticlimactic. Nearly everyone anticipates a slight acceleration to 7.2% and 7.3% from 7.0% at year's end. A 25 BP increase next month has been discounted by the market. There is a 30% chance that 50 BP will occur. Remember that the CPI soared last year from March to August. The year-over-year rate is likely to fall as they are no longer included in the 12-month comparison. Yesterday, Macklem, the governor of the Bank of Canada, issued a hawkish warning. He warned that the policy rate could need to be raised to neutral in order to alleviate price pressures. Next week, Canada will report January CPI. It was 4.8% in December. The US dollar is still a strong supporter in the CAD 1,2650 to 1,2660 region. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.